Hey everyone, welcome back. Here today with Tim for Oracle Investment Club, episode number 15, the big 1-5. How are you doing
Hi,
today, Tim?
I am doing awesome. I'm loving this new format. Let's see how this plays out today.
Yeah, I think it'll be fun. So we've got a lot of good Tesla news this week. Tesla Shanghai seems to be back. They produced 33,000 vehicles. Usually it's 60,000 or more, but that's up from the meager 10,700 that they were able to do in April when everything was locked down, obviously. And they're now back to 100% daily production. So that should definitely help maybe save the quarter even.
I don't know if it's going to save the quarter, but I mean they're looking at 71,000 for June, which is bigger than before. So I mean they've already announced that they're back to 100% productivity there. Looks like Saturday they should be back to full freedom there. No more lockdowns, and this goes for all the suppliers as well. So this is phenomenal news. I guess Tesla has also bumped up a bunch of their orders also. So looking at supplies coming in, they should have no problems with supplies, nothing to be slowing them down in the foreseeable future right now.
Yeah, for sure. So lots of momentum. I think we got a little bit out of that. We did get a little bit more of a teaser on Master Plan Part 3. So Elon apparently told the company last night. We basically already knew this, but all about achieving very large scale in order to shift the entire energy infrastructure and transport infrastructure of Earth. There has to be a very high scale, and so he basically summarized that it's going to be Master Plan Part 3, all about how do you get enough scale to actually shift the entire energy infrastructure of Earth. So maybe we'll see some focus on like mining, refining end of things. There's a lot that goes into that. What do you think?
Yeah, and I was actually talking about I was starting to make my video for the morning and talking about that, and like think about the extreme size that they're looking to get to. And when it comes down to the size, it's not just like, hey, Tesla wants to take themselves to this size. They're talking about taking the entire planet to renewable energy. 300 terawatt hours of batteries needed for all of this. That's enormous. And, even Elon himself has said, they're not looking to do it all themselves. They can't. That's impossible. So I think, helping the whole entire world transition is going to be huge. And, you talk about an end game. He's like, all right, we only need basically roughly 300 terawatt hours worth of batteries. Let's work ourselves backwards. What do we need to get there? And Tesla's literally helping every company that is needed to get to that point along the way, whether it's going to be lithium, and they see that's going to be the biggest hiccup that they're going to see along the way. So their focus right now is how can we help lithium get moving along so we can transition even faster. And again, it's not just for Tesla, it's for the entire world. And that's what their focus is. So when you have a scope that is global scope, and you're just getting a piece of that global scope, that's huge. Companies who just focus on themselves, and they just get a smaller piece of that, that's small. But going globally, that's a lot. And even if they only get 10% of it, that's huge.
Right. They'll be leading the way. And yeah, that's another criticism I've heard is kind of like for a company their size trying to do more than they can handle. But I think when you look at it that way, like, yeah, they're not saying they're going to do it all. But even if, like you said, they get 10%, right now, odds are when all said and done, let's say in 2030, they get 10% of the car market. But by 2030, they're working on the next level here, which even if they only end up with 10% of that, being the leader in the field will justify, evaluation.
Oh yeah, I mean, just look at the EV market alone. I mean, for the first 10 years of their existence, there was no EV market, but they literally created the EV market. So they're basically trying to do the same with renewable energy. They're creating the renewable energy market. And once that takes over the whole world, then oil is going to go to the wayside, and oil is going to be used for minimal things, and renewable energy is going to be for everything else.
Right. Yeah. And, it's interesting. A lot is obviously also pegged on the full self-driving, which interestingly enough, Tesla has now filed to use a new radar in its electric vehicles. So obviously everyone was a little confused by that because Elon had made it clear that, they're planning to do self-driving, only camera-based, vision, neural nets. And now I think there was the patent for it. So they may not actually end up using it, but it just was interesting to see that.
Yeah, and I don't even know what it's going to be used for. And it's radar and not LiDAR. So obviously LiDAR is the better one. That's what everybody's saying. You need the LiDAR to go along with the cameras. So what radar would be used for, I don't know if it's gonna be part of FSD or for something totally different. That has yet to be seen. So I'm not sure. I mean, they've got a lot of awesome patents out there, and I'm really curious as to what they're going to be using them all for.
Yeah, and I think he had said something about it not being regular radar, but like an HD radar, I think. And he said if you can get it to a certain point, then it would be worth it. But the problem with radar is that it has never advanced to that point where like he sees that it would be useful. So maybe they'll try and do that too. It could be like our backup, or you can kind of get the best of both worlds. Maybe they do end up employing both. I don't know. We'll see about that.
That's true, because I know that one of the issues that they had before is when they used both radar or lidar and the cameras, is when the computer's got to make a decision as to which one do you listen to when there's contradicting information. That's where they had the most issues coming up. So unless they were able to solve that piece as well, and then decided, maybe they did figure out the HD radar, maybe that's it, and maybe that's what's going to create it. I don't know, but then you think about all the cars right now that have FSD beta in them, they don't have the HD radar. So are those cars going to be eligible for, FSD in the future at level 4 and level 5 because they don't have that camera and that radar?
That's a great point. Yeah. And it definitely adds a whole other layer to it. But we have US EV registrations. Did someone say competition?
Oh, I know.
So we've got Tesla. Here are the numbers. Tesla, 140,000 EV registrations. Ford is in second place. Go Ford. We've been, giving Ford some praise. I mean, they're really trying, and they're in a very distant second with 11,700 sold. Then Kia, 11,000, Hyundai, 9,000, Nissan 5, Volkswagen 3, Chevrolet 1,600, and it's down 88% year over year. And so if you add up everyone but Tesla combined, how many EVs have US registrations thus far in 2022? Tesla has 139,000, and everyone else combined has 44,000.
So Tesla has 100,000 more than everybody else. And you look at, and yes, again, we've been talking about Ford doing a great job, but then you look at, where is GM? Barely on the radar. Chevy's out there. And then, even looking at all the other competition, the Japanese automakers who took over in the 70s were faster to get on this boat than Legacy Auto was. So again, we don't know how the story is going to be written. It still has yet to play out, but just looking at, history and how things go, Legacy Auto is not holding themselves to where they need to be and keeping up with the times.
Yeah, that is a really good point. And, it is interesting again that like Ford is, in second. So I got to give them that. But yeah, Chevrolet, who's leading the way here, selling not even 2,000. I mean, and it's declining year over year when like more of their efforts you think are shifting to this. I mean, it is interesting. And that really makes you question. I agree. I think the biggest competition is coming from definitely Asia, China and Japan. And, definitely for the most part, compared to GM and Ford, I mean, if they're moving this slow and they're really targeting, 2030, we're going to be 50% EV, they may not even get there.
Yeah. I mean, just thinking about if we do get into a recession and it gets to be a deep problem like Elon thinks it is, I mean, then we're looking at Legacy Auto could struggle. And, I was talking to one of my subscribers today in the comments talking about, the government loves Legacy Auto, they're so tight and tight with them, so they'll just bail them out again. I'm like, but do you think that would get approved? I mean, realistically, you go back to, 2008, 2009, it was a housing market crash, and automotive makers had to get bailed out. So they've already been bailed out once during a tough time. Do you think that people would approve of them getting bailed out again? I mean,
yeah,
and you think about it, Tesla paid off their bailout, earlier than they needed to. And as far as the government was concerned, GM was just lost money. They considered that to be lost money. They were never going to recoup that. They recouped it from Tesla. And the little bit that Ford did take, even though Ford didn't go bankrupt, the little bit that Ford did take is paid. I think that's paid back also. I'm not sure on that one. But either way, it's like, who, especially with the Congress that we have right now and the Senate, there's no way they would let that fly. There's no way that they would bail them out because they're like, no, I was lost money before. We're already high inflation. We're not giving you extra money to bail you out again. So legacy auto
Yeah.
could be boned.
And it would really be, when you think about it like that, I mean, there's a bunch of factors, but it would be really a bad look if while everyone struggles and, gas, let's say, if gas kept going up, everyone's struggling. Everyone's basically getting to the point where like gas and groceries just eat into so much of your pay. If as that's happening and gas at an all-time high, the government then turns around and were to have to bail out like GM and like Ford, I think there would be an uprising because I mean that would be absolutely ridiculous. You're bailing out the companies that are part of the problem
Oh
and
yeah.
not not letting the one lead.
Yeah, and not only that, but because they are all unionized, a lot of their workers are going to be asking for more and more money, which is going to be a bigger cost to these companies.
Yeah, they're not running light, agile, operations. And I don't think people realize how much, that extra layer adds to just how long progress takes to make. I mean, I've worked in, bureaucracy, like teaching, like the bureaucracy is like, it makes sense. Like it's kind of slows everything down. And the government, it's the same way. So when you think about it, like all these decisions that, company A can just make on its own, company B has to wait 6 months to, do whatever they need to do, get the union approval, and if they'll even do it. And that's the other thing that's crazy is the unions are fighting them because EVs will cause so many jobs to be lost because, I mean, it's a different technology, but also there's just so many fewer moving parts. I mean, it'll be really interesting to see how it all plays out.
Oh yeah, I'm actually really interested to see the battle we're going to see between dealerships and legacy auto because Ford's already talking about it. At least Ford is very open about it, which is nice. But think about the profitability and the fact that Tesla has the profitability that they do. Legacy auto's not even profitable with it. And in order for them to even get to a profitability point, they have to go to direct sales. There's really no other option. And if they go to direct sales, dealerships are out the window because dealerships they're not going to be needed anymore because you're not going to need service centers. Like, sure, you may need a service center, but how often are you going to need to take your EV in for service like you would an ICE vehicle? Very rarely, maybe 5% of the time. So, dealerships have no real reason to be around anymore. So they're going to put up a fight and claw themselves. And I'm sure that's probably why a lot of legacy auto is fighting the way they're fighting because of their dealerships. Their whole entire business model makes no more sense for the future and had its place. It's not needed like that anymore. There is a better way. And I mean, it's going to stink, but all those people are going to end up having to figure out a new way about doing things. And it's going to have to be with EVs if that's the way they want to go.
That's a great point. And when you, kind of apply it to just speaking for how fast and agile company that Tesla is, they pushed AI Day back to September 30 because they said they may have a working Optimus prototype by then. And it sounds crazy, and I'm really not expecting anything crazy. But if they have a prototype that's up there doing anything and like not a guy dancing this time, like an actual robot, everyone's going to lose it. And again, it just shows you this is something they really went like all in on, with this new, solving real world artificial intelligence and making a robot less than a year or maybe a year ago. And just that they're already to this point, like even if it's something silly, if it's working, I know that every month I've seen how quickly FSD is improving, So you can kind of factor all that in that like it's going to progress rapidly. It may not be much to start, but like it's going to be pretty wild if they really have something.
Oh yeah, and I mean, Elon said it himself. He goes, we can whip up a prototype with 500 people in 6 months. And you think about it, he said that at the Q1 earnings call at the end of January. Well, guess what? September is a little over 6 months. Makes sense they have a prototype. Now, of course, he did respond to Dave Lee and said it's not going to look anything like the guy dancing on stage. But like you said, it'll be interesting because obviously there's other robotics places out there. You've got, Boston Dynamics and all sorts of other things that are working on these things. So what I want to see is, okay, so has Tesla come up with something that's at least comparable to that? And is it functional? Because the difference between what Tesla has and everybody else is FSD. And when you start putting FSD into this robot, that's where it makes a huge difference. Because a robot, you have go out there, you can program it out whatever you want, and then you can play around with it. But to have one that goes out to think on its own, That's going to be the big piece. And like you said, though, just like FSD beta going right now, once they get it out there, the progress is significant, because putting FSD into any sort of robot that can start picking up with their cameras all the information they need to take in to improve the real world AI that goes along with a robot versus a vehicle, that's going to be the game changer.
Yeah, it's truly going to be revolutionary. And yeah, just kind of like adding on to that, we already have, like you mentioned, we've got all these other robot companies. So to think that it's that outlandish, we have robots in all these factories basically already, getting everything where it needs to be, making it, humanoid or even, able to kind of like move more smoothly is just the next logical step. Like we already have autonomous robots. There's a company called Symbotic. My friend was just telling me about it. They went public via SPAC, I think, a few days ago or a week ago, and they went up quite a bit. But this is a company that Walmart is, invested in. Like they're supposed to build the warehouse infrastructure for like 40, I think, Walmart, distribution centers. And I think it's called Symbotic. But so that's basically all they do is they have these robots that are operating autonomously, just getting everything where it needs to go for the most part, and then maybe you have a human take it the last step there, but it's the next logical step.
Oh yeah, and that makes perfect sense, because you figure most of the robots and machines that they have now are fixed in place. They're a fixture of some sort that's going to speed things up. So to detach them and have them be mobile robots, you're right. That is the next logical step, is to have a robot that's not any longer attached to a specific place and can move around freely on its own where it needs to. And then you just take it from there. And then that's where the AI and the growth come in.
Yep. And then we're unchaining the future Terminators.
Yeah.
Just getting closer and closer. We opened Pandora's box here. Gotta be very careful. But
yeah, Terminators. My great granddad used to move boxes in Walmart.
Yeah, my great granddad was invested in Tesla. Oh man, yeah, it's crazy to think about. Like it's like you said. I mean, they have robots that are on tracks. They have robots doing so many different things, and obviously Tesla uses a lot as well. But like you said, most of it is stationary or it's on a track. Obviously it's hard to solve, but it's not that unthinkable. And again, when we think back, like it sounds ridiculous, but all these sci-fi movies, 30 years ago, basically end up like predicting the future. Like we have this technology now that everyone back then was like, that's absolutely insane. That'll never happen.
Oh yeah. I mean, look at like movies like Back to the Future, things like that. When people are like, oh, you have a TV? You would have ever thought that you could have, the technology that TVs brought to you was unthinkable. And then in the 90s, computers became, more prevalent, and nobody thought that was possible. And now we have computers in our pockets, and you and I are talking to each other right here from thousands of miles away, or hundreds of miles away, and having this discussion through a tiny little computer in our pocket. That technology, and people always thought that would never happen. If you brought this technology back 200 years ago, they would have had no idea what the hell they were looking at. And in 100 years from now, people are going to think the same thing. And the speed technology moves at is exponential. So where it took, 100 years to get us from horse and buggy to EVs, we can go from EVs to who knows what in the next 50 years.
That's actually exactly what I was going to say next is, if we even go way back, I mean, how long have we had electricity? Maybe 200 years, 150?
Yeah, late 1800s, yeah.
So, like, it took us that long to just get to the point where we had electricity. But then 60 years after that, let's say, whatever, TVs or whatever the next iteration was, and, the electricity system getting better. And then we get the internet. Basically, I mean, when it became mainstream was what, maybe 2000. We've had it for not even 20 good years. It was rough in those first few there when you're, sending like AOL emails and stuff, or with the dial up on the internet. Oh man, throwback. But when you think about, we've only had this latest, biggest thing, new iteration of technology for that short of a time span. That's 20 years. It's not unthinkable that, whatever the next big gap is, if it took 20 years for the internet, maybe it takes 10 years. But with each new iteration, we're just going to progress faster. So I feel like just in general, the technology is just going to rapidly advance. And that's why I think in general, it's not just going to be Tesla. The companies that can adapt, or the companies that are most able to adapt quickly and run, these light operations, which basically all the tech companies kind of have that advantage already versus, other sectors. That's going to be, sink or swim. I mean, they'll determine who makes it.
Right, exactly. And it's these companies who latch on. I mean, you can go back in history and whatever companies were agile enough. And so the things that you pay attention to are companies in the past who grabbed onto the new technology and made their foundation that technology, usually go to the wayside because eventually that technology gets replaced and they're gone. Look at legacy auto. But the companies who are agile and understand that, you know what, this technology could get replaced, so we need to make sure that we're agile enough to shift with times along the way, will adjust. Apple and Microsoft are two of them who have seen these changes coming along the way, but they've not put themselves in such a rigid place where they can't shift out of that. I mean, legacy auto obviously has been around for a lot longer, so it was tougher for them. So who knows, maybe in 50 years, there is a technology that comes out that these companies can't convert over to. But again, it comes down to, you look at, like Elon said, sometimes you just have dead weight that needs to get cleaned out of the market and out of companies, because replacing them is a lot easier than trying to transition them. And that, I think, unfortunately, is just where legacy auto is. And sure, they can transition, but it's so much harder to transition than it is to start from a clean slate.
Yeah. And what you said, about being agile, that is the key. And even when we look at, why have some tech companies fared better than others? When you compare, Apple and IBM 40 years ago, one was a joke. And like, you'd think IBM, being a tech company, would have had their finger on the pulse. But what happened there was they kind of caved to Wall Street, and they got to that, which inevitably I think can happen to every company, but started focusing too much on quarterly and not enough on, making the new innovations that they were, so well known for prior. And then Apple, like, perfect example, starts with computers. I mean, they didn't really get big until 20 years after they were founded, let's say, but the MacBook, then the phone, it's like just the next iteration. So when we look at a company like Tesla, who, it's actually the safer thing, almost the more conservative thing, if you will, for Tesla to basically be getting ahead of the curve on all these other future industries, because we already know they're dominating electric vehicles. But it's like you said, most companies who don't adapt, who are the founding, the first pioneer, they don't tend to last. So Tesla's almost giving itself all these fail safes in the form of 6 different startups that can be funded. Let's say it's true, like 10 years from now, the competition's caught up. Well, if Tesla's funneling all those profits from the EVs right now into making just one of these other, let's say 6 startups built in need to succeed. Like, they only need one to succeed. I think they all will. But if they can funnel all that money, it's not unrealistic to expect, let's say 10 years from now, Tesla does only have 10% of the auto market, but they have a significant chunk of the insurance market, of the autonomous driving market, of energy, semi-trucks, and all the other things they're going to come out with, to where you see them be almost like the Amazon and Apple meeting. Like, Amazon's kind of got its tentacles a little bit in every industry. So Tesla's basically the first mover, give or take. Obviously, there's other companies that may have beat them to it, but they're moving so fast in all of these industries that have not even really begun yet.
Oh, yeah. And like you said, maybe when Tesla hits 2030, their growth is going to slow down. It's going to happen. That's just natural. That's what's going to happen. Eventually, you're going to hit a point where growth slows down. So where is the next growth point for them? And like I said, they've got 5 or 6 other startups that are working on it. And Dave Lee's got it out there about, all the exponential curves that they've got. And they're at the very beginning of the smallest exponential curve that they're working on.
Multiple S curves.
Yeah. So, I mean, talk about generational wealth. This isn't like Tesla, I'm going to invest in it for 10 years. And then as soon as they're going to become a value play, then we'll, kind of monitor it from there and sell out and pick up the next big growth stock. Because the next big growth stock is Tesla. Like, I'm going to go from Tesla EVs to Tesla Energy to Tesla Optimus. And, where do you go from there? There's so many different other startups, like you said, that they've got to jump onto. So what's the point in selling when they're just going to keep growing bigger?
It's, you're making me think now. There's probably, I mean, what would you say? Do you have a target where you would sell Tesla shares, or are you just going to hold it? Because if what you just said and kind of what we were talking about, they're just on the beginning here of multiple S curves, EVs, then the artificial intelligence, then whatever else, robotics. Like, how can you sell this company? It's going to be a company that probably eventually does pay a dividend, and you might as well just hold till then. but obviously, can't predict the future. It's crazy to think about that, though. It's like you said, but like, would you have a target in your mind where like you would sell?
Probably not. So for me, I've got the two different mentalities, and it's going to be a long term and short term. I know Chicken Genius has his itchy fingers little category that he's in, and
That's key. Yeah.
that's basically what my IRA is. And so for right now, it's if I'm going to sell or do anything like that, it's because I see obviously Tesla fluctuates a lot in the market. So if I can see opportunities to sell out at a certain price, like for some reason, if we ran up to $1,500 in the next 2 months for some stupid reason, yeah, you can bet your butt I'm going to be selling out of my IRA because realistically, with the macro environment, unless something drastically changes, it's going to pull back. But when it comes to my main portfolio, I'm not going to touch it. It's the main portfolio. You set it, forget it, and let it go. I'm still a little guy. I don't have a lot of shares. So, and just seeing the potential future and looking at even if it hits $1,500, I still have a price target of $12,000 by 2030. So what would be the point in selling at $1,500 when I think it's going to 10x from there within the next 8 years? It makes no sense.
That's a great point, and I think this needs to be taught in the business school. The itchy fingers portfolio is like actually the greatest thing ever. It's basically something Chicken Genius Singapore YouTuber used to talk about, and it was basically his account to just kind of speculate more in. So he had his main account. Let's say he had like 1,000 Tesla shares in the main account that he was never going to touch no matter what, because he truly believes his company's going, to be the biggest company in the world. And then he had a small account for like speculating. And it's funny you say that you use your IRA for that, because I basically started a separate account to do the same. I haven't sold any Tesla shares in it yet, but I do have, I have like a bunch of other more speculative holdings that I hold in that one. And that's the way I look at it. I'm like, this is my itchy fingers account. If I ever am like tempted to do something stupid, like I'm going to just do it on this very, very small scale and just let the main portfolio just ride as much as I can, obviously, until I need the money.
Oh yeah. And for me, like I don't mind swing trading. I enjoy kind of following the market every day. That's why I have my channel, because I like to follow it, despite the fact that I don't really do a lot of swing trading at all. But I like to be active. And so that's why I dollar cost average and pay attention to the daily market, because I'm adding money every day. But when I see these good opportunities, I'll add a little bit of money here and there. Got to be wise about it, because you don't know what the future is going to bring, especially with this macro environment. But if I've got a giant stockpile of cash and I've got plenty of cash flow coming in, I can still stay active in the market and dollar cost average and buy a little bit here and there, but still let everything ride long term without having to worry about the fluctuations that's going on. So it's kind of somehow in the market that we're in, I've made it a stress-free environment for myself.
Congratulations. I've been trying to do the same, but I'm not gonna lie, like 2022 has been rough. And I think at this point I'm like conditioned to it. And like, I didn't sell, any Tesla. Like we've talked about in the past, I sold a little bit of my non-core positions, like maybe 10% here and there, never touched any Tesla. But like you said, like 2022, it's been tough. If you're like not stressed these days, like you deserve a medal. But I think I'm conditioned to it at this point too, for the most part. Tesla could drop 50% from here. I don't even think I would like flinch. I'd be like, all right, I'm going to buy some more today.
Oh yeah. And sure. It's not perfect. There are some days where I'm like, man, it would really be nice if we could.
It would be nice. Yeah.
But when you understand the macro environment, you understand the reality of the fact that we're probably going to be in this for at least 6 to 12 more months. You just become numb to the pain and realize, all right, well, if I'm just going to accept this pain and just accept what's going to happen to me, then you can set yourself up a plan. And at the beginning of the year, I had set that plan for myself to make sure I had cash flow coming in and to make sure I had cash on the side to be able to continuously take advantage of this. I had been bitten enough times in the past where, the stock market pulled way back. And this was actually during the COVID run-ups. Stock market pulls way back and I have nothing to invest with. And I'm kicking myself. And those were the times I found that I was really upset with myself and upset and stressed out, because I'm like, I have no way of taking advantage of this opportunity. So now in the situation I've created for myself, I can take advantage of the opportunity. So now when we're in a market like this, it's opportunity versus missed opportunity. And that has made the world of difference for me.
Yeah, I think that's another really good point. Like, and you have to look at it that way, and you have to kind of set yourself up. because the alternative is not even an option. Like it's the worst thing, because I've been there too with you. You buy the dip, but it keeps dipping, and now you're out of cash. So yeah, like I've been trying to do the same kind of thing as you. I have my monthly amount. I put a certain amount into the index fund, and I'm putting a certain amount into Tesla every month, no matter what. But like if it does dip more, I might put some more in. But I never want to be in that situation again where you're spent, like you can't capitalize on it, because I've been there, and yeah, it's not fun.
Yeah, where you're just totally helpless, and it's not going to matter because the market's going to turn around, and you're still going to go green on the other end. But it does cause that stress for you, and you're like, oh man, I wish I had cash. What can I do? And then that's when you get that urge to, ooh, let me sell out of something.
Yeah,
even
exactly.
If
You try and time it.
Yeah, and you're like, oh well, I really want to buy more Tesla, so I'll sell this for a loss to buy Tesla. Now I don't have to worry about that. Now I've got some losers, and I'm like, you know what? I'll leave the losers there. If by the end of the year I need a tax write-off, I'll then sell those out at that point. But I'm not forced at this point right now, or feeling the pressure to sell out of a losing stock to add more to Tesla, because I've set myself up for it. And it was a learning curve. I definitely, paid for this lesson over the last couple of years to get here. But now it's a lesson that is paying off for me in the long run.
Definitely, that's all really good points, and yeah, I mean it's so key. Like it's a learning curve, and I'm doing the same thing, but at least you tend to get these things over with when you start investing, or earlier on when you're dealing with less sums of money than later on, which I think is why it's also so important people start young, because like once you like getting toward retirement age, people are just starting to invest. Like I can't imagine. I would make so many mistakes, and then I'm dealing with like huge sums of money. But going back to what you said, like I think we're not out of the woods. Who knows? It could get better in 2 months. It could drag on for 12 to 18 months. And I'm like fully, expecting either. Like I won't be surprised. And that was like my whole point. I wanted to take care of everything, make sure I'm kind of prepared, heading into a potential situation like that, and not getting caught with no reserves. But it's funny. I've been reading the Wall Street Journal, and it's kind of the best and worst thing. I got this paper subscription. I'm going old fashioned with it.
Nice.
But I've been liking it because I feel like I am keeping up with everything that's going on day to day. So like I can kind of, understand, and like, okay, inflation's doing this month. Like here's what I should be paying attention to. But on the flip side, it's a double-edged sword, because I feel like it's making me focus too much on the short term, where again, like that, what we talked about earlier can come back, where you start trying to like time things. And obviously, again, I have my system I stick to, but it's funny. Like I'm seeing the temptation. I'm finding myself too caught up in like these daily events that end up, it's all noise, like when you actually take a step back, because basically what I used to do was just read the, quarterly reports, some Tesla articles here and there. But like now that I'm reading the, world news every day, I feel like it influences people.
Oh yeah, absolutely. And that's one of the hardest things to do. And I've learned it from watching media, social media, you see it a lot, is being able to read through the manipulation to see what are the true facts as to what's going on, and how does this affect my strategy. So how can I adjust my strategy to go along with the truth as what's going on? But it's finding the truth. It's hard because there's so many people out there who are so good at manipulating. I know Jim Cramer's got that video where he explains how hedge funds specifically will go out there and do this. Just like we saw last Friday when it comes to the 10% job cuts for Tesla. Like that was textbook hedge fund manipulation right there. Somebody on the inside for Reuters knew somebody at Tesla, got this email leaked to them, and somebody in that hedge fund was like, ooh, I know somebody who's going to be over at Reuters. So the hedge fund says, I got this leaked email. I want to pull the stock down. This is what you're going to report. Boom, here's your report of the misinformation facts. And then we find out later that it was 10% of salaried workers, but hedge funds going to increase. But by the time the truth came out, damage was done, and we hit the weekend. And then, of course, we saw the bump back up on Monday to start the week.
Yeah, that's a really good point, because yeah, it was blatantly misreported, because it came out. Yeah, it could have come out sooner on Tesla's behalf. But again, there's two ways to look at this. One, it's annoying, but two, it just goes to show you how irrelevant And it's like you said, though, that's part of the strategy, because then they get you to make an impulsive, emotional decision. And I feel like that's just where the research comes in, the conviction. You have to do your own research, like you have to like understand, because when you understand the company like the back of your hand, or you have a deeper understanding, like Shanghai is a perfect example too. Shanghai production, they were locked down for a month, and it was the end of the world. Tesla's finished, in the media. And I'm looking at it like, all right, worst case, they're going to have a bad quarter and I'm going to buy a ton of shares. But like, I was never going to sell over that. But again, you read all the fear, and like, they're like, oh my God, like this investment's going to crash. You got to sell now. And it's crazy. You really have to, like, the best thing you can do, you got to like write out, your thesis basically. And, I do this too. And like, I'm trying to, when something comes out, I'm trying to be better about wait like a week, a month, and like decide that before like, I'm going to make any decision, because again, you just get caught up in the short term, emotions of it.
Oh yeah, I mean, and now of course, if the Shanghai thing happened back in 2018, that could have spelled disaster for Tesla for sure. But that just goes to show how far Tesla has come along, where a month lockdown in their top manufacturing facility didn't really phase them all that much, a blip on the radar, and they're going to keep moving forward. And you make a great point, and it made me think, like, when you read an article or you see some news, you've got to take your step back. And for me, you'll take a week, and like I'm a fast reactor. So for me, I'm like, all right, is my initial reaction emotional? And that's a great point to bring up, is my initial reaction of, ooh, I should sell this because of fear, or ooh, I should buy this because of excitement? And then you have to ask yourself, all right, are these emotions justified? Is it a legitimate reason for me to purchase or sell the stock? And if the answer is yes, then okay, then you found a fundamental reason behind it versus an emotional reason. And that's all it is.
I actually really like that. That's great. You really just have to take a step back from it. Yeah. And not like, you got to get it back in the driver's seat, basically.
Oh yeah. Because otherwise you're going to get into the FUD or the FOMO. And if you get into either one of those, then you're just playing right into the manipulators' games.
Yeah, it's interesting to think too. I mean, that's a fair point about Shanghai. Like, had it been even a year or two ago, it would have been a big different story. But knowing that they had, Berlin ramping, they had Texas ramping, that definitely, I think, put me at ease too. But it's interesting that they predicted for 2022, before all this stuff, that Tesla could have hit that 1.5 million production number with just Shanghai and Fremont alone.
Yeah.
So I really wonder. I mean, I'm sure that they're going to be very behind now, but I almost wonder if they could still get to that point with the. I know like Berlin and Austin are ramping very slow, but like if Shanghai is fine from here on out, I mean, at worst, they probably missed, what do you think, a couple 100,000 for the quarter?
Yeah, and I mean, and the fact that they were able to come back online as fast as they did is huge. So it's like, maybe they stumbled, but it wasn't like they stumbled and fell down. They literally stumbled, caught their balance, and then got back up and kept running. I mean, this is really where they're at. They're thinking about the fact that they were locked down for a month, completely shut down. They had to get the thing back up and running with one shift closed loop, got to a second shift closed loop. Now they're finally back to reopen at 100%, and they're already beating the numbers they had before. That's nuts. And then, Elon, how he's just nonchalantly saying, yeah, Q2 might be a little flat or down, but you're going to see exponential growth in Q3 and Q4. I think, not to say that, he's got to have something that he knows what's going on. There's got to be something that maybe they were intentionally, and this is one of my theories, is they were intentionally running ramps slow in Berlin and Austin before Shanghai even happened. And I'm sure they probably, were happy about it, because by having the ramps being slower in Berlin and Austin, it's going to keep their costs down. Their ramp costs are going to be lower for Q2. And the reason for doing that is because, they knew that they were going to have a slower quarter to begin with. So this way they can keep revenues high. They've got this back pocket revenue that they can throw out there, maybe from FSD. It'll help Elon hit, his last tranche that he needs to by hitting 30% margins 4 quarters in a row. So by doing this during the most difficult times and having a ramp being slower, now when they get to Q3 and Q4, deliveries will be higher. And even though they may have higher ramp costs during Q3 and Q4, they've been able to spread it out instead of just being in Q2 to keep costs down and their margins higher.
Yeah, and they could the growth trajectory will look a lot better because obviously if they had a great, earlier Q2 and Q3 and then it was down in Q4, probably bad optics, especially for Wall Street. So you accompany that with even beyond that, I mean, that's trivial compared to the actual volatility that we have been facing, that we may continue to, kind of setting themselves up to better face that as well.
Yeah, I mean, and this is something, when Elon, going through the dot-com bubble crash when he was with PayPal, going through, the housing market crash when Tesla was just a little baby, he has seen the worst times during both of these. And with PayPal, they learned how important it was to have a stockpile of cash. So Elon anticipated this coming up. So you look at Tesla, they've got a giant $18 billion stockpile of cash. They have great cash flow generation coming in. They have no debt. I mean, this is what I talked about at the beginning of the year just for myself to be able to keep myself at a good position to handle it all for investing purposes. Elon has done it for Tesla to get through this. So he has completely prepared themselves for the worst, and they can get and thrive through this. So whoever hasn't prepared is going to be suffering.
And, I didn't even really think about this until now. You bring up PayPal, and how many of the PayPal mafia, so-called, went on to create and run all these other very successful companies. A couple that come to mind. Obviously, they all did great things. One guy started YouTube. Peter Thiel's got Palantir, and you look at what Palantir did. I mean, he's he's not the CEO, but he's up there. Look at what Palantir has done. They didn't get caught up. I mean, the stock has gone destroyed, but they got rid of all their debt. Right? They're like growing slowly, but they're not like overkill. They're riding out the storm properly. These guys know what they're doing, who have been through a couple of these crashes here. And I didn't even think about it like that, but that I'm sure impacts Elon's decisions too. And when he has certain timing on things and whatnot, with the whole Twitter thing has been an absolute nightmare, but it's kept Tesla stock kind of tame. Because if Tesla had run up really ridiculously without any of the nonsense, the circus that has begun, it would probably could have been at 1,500, maybe 2,000, depending on how euphoric it got. But just imagine when the market crashed or started to correct, how much it would have dropped. And that's what destroys companies. I mean, they could have dropped 70, 80% or more.
Oh, yeah.
And so they knew to be prepared for the worst here, get rid of the debt and stuff.
Yeah, and people, I have so many people that I see who are complaining, Elon's crashing the stock and this and that. And I'm like, look, I am a huge Tesla bull. Not even, I can see them going to the moon without a question, but you still have to be realistic where you can't get the stock price to 2030 prices now. You realistically can't. And that's where Elon's mind is he's very much the stock price should be worth what the company is worth now. And yes, you could put growth on top of it, but when you start pricing in 10 years worth of growth into the stock price, I have no doubt that makes Elon a little nervous. And I don't think he intentionally crashes the stock, but he kind of allows nature to take its course and run its course. And this is healthy. This is a very healthy thing for the stock to be pulled back and compressed like this to allow the fundamentals to catch up to the stock price. It has to happen. If it doesn't, it's really not good for the stock. And like you said, you can run up and all of a sudden you get an 80% crash. People freak out, and that's really detrimental to everyone involved.
Yeah, and I think this is something few people understand. I've talked about this in the past. I think in a couple of videos. Even Ben Graham, intelligent investor, Warren Buffett, these guys. Ben Graham had even said it's not only a management CEO's responsibility to ensure a stock doesn't underperform, but that it doesn't get too far out of hand and keeps the valuation at a reasonable level.
Right.
And it's exactly why it's like a level of responsibility, and not even that he intentionally does it, but like you said, he almost just kind of tells it how it is. For example, when they got the Hertz deal, everyone was losing their mind. I mean, it was a huge deal, but for the stock to go up a couple $100 billion of market cap, probably not. But so he kind of calmed that down because he was like, they're going to have to wait just like everyone else. This isn't even confirmed or whatever. But that was a scenario, again, like you said, I don't care short term. The people who care short term are speculating or day trading, or just, don't have a long term time horizon, or are looking out a couple weeks or months, because I see it all the time with Twitter. Yeah, people are annoyed, but again, he's doing a service. He's behaving how the management is supposed to. You're supposed to ensure it doesn't get you out of whack, because yeah, like you said, we hit a recession here. You either go bankrupt or you're going to lose 90%. And we have seen that kind of happen to a lot of these companies that were the most overvalued, or maybe the unprofitable ones have definitely gone at the worst.
Oh yeah, some of these SPACs and stuff just got beatings over the last 6 months. But you're right, and Elon's view, and if you take a step back and look at what Elon and how he talks, he has very long-term euphoria, but he dampens the stock down in the short term. And there's nothing wrong with that. Like you said, that is what the job of a CEO is supposed to do, is keep everything realistic. But when he's got long-term euphoria, that's how he has so many long-term investors in the company who just keep putting money in on a regular basis for the long term, because that's where he sees the company going. They've all said this is just the very beginnings of where the company is going. And so he's just, yes, we're going to be awesome in the future, but let's be realistic about it now and let the company build up to that and not let the stock price run away.
Yeah, it's crazy. Like, I can't believe I never thought about it this way. Just going back to, I'm stuck on the PayPal mafia thing, because you always hear, well, if you follow all this stuff, they're always talking about the PayPal mafia, but all they say is all these guys that worked at PayPal went on. David Sachs was another one. Love him on All In Podcast. What a great podcast. That's gonna be us one day. 2 views today, 2 million next year. But they always celebrate their success, but I've never seen this talked about, and this is totally something that needs to be explored more. They've been around, they lived through, not even lived through, they were running startups through the dot-com burst, through 08, 09, and they're still involved today. They have learned some things that you don't learn without going through that, and what a huge advantage that is, for them. And it just goes to show you again, the 2 companies that come to mind now that are kind of, most relevant to those PayPal mafia founders, Tesla and Palantir. What did they do? They got rid of all their debt. They prepared for Judgment Day. Palantir was buying gold bars, got rid of all their debt.
That's right. I forgot.
They weren't buying Bitcoin. Bitcoin's digital gold. No. They saw the signs. These guys, they get it. And what an advantage on top of all the other, the genius you get with Elon Musk. He understands how the economy, how these markets, how it's all works. And when, trouble is on the horizon, maybe we should listen to him. I guess it's a good segue to his really bad feeling he has.
Yeah. I mean, and thinking about the last 10 years, for me, I got divorced, we're very dire straits, severe debt. So I had to dig myself out of it. And the amount of stuff I learned along the way is why I'm as successful as I am today, because of what I learned over the last 10 years. And like you said, these guys learned all of that. So they know what super bad feelings can bring. So these super bad feelings, they're now prepared for them. When Elon sees the government's just pumping out tons and tons of free money, he's like, oh, light bulb going off. Yeah, guess what? We're going to be having a lot of inflation coming up. And what happens with inflation? Potential recession, all of these other things that could come out of it. Let's prepare for it. And so I have no doubt that they've got this cash out there. And I wouldn't be surprised if they spent a lot of that money, because I know Amazon did it, and spent a lot of that money on real estate for a bunch of factories for the future. Because when you can borrow money for free, I have no doubt that they did that and probably paid off that in the same time. So some of the money that they brought on as debt and then have since paid off may have been for some land around the country and around the world at very, very low interest rates.
That's a really good point too. I mean, I know that's what Amazon did a lot of, and now they actually are leasing them out, and they're not going to be using, and that just goes to show you too, they're not dumb, and they're gonna make money off of them. But the fact that Amazon bought all these warehouses to meet demand, and now they're foregoing that, they probably see that if there's not trouble on a horizon, at best, it's not gonna, maybe it stays flat, but if there's gonna be more demand, they would have kept those, warehouses. And yeah, you start to think about it all. It's so funny. I think back to when you had all these CEOs selling probably end of 2021, in the fall. I know Satya Nadella sold a ton of Microsoft, and that was kind of our first warning. I didn't take it though, but like this time I'm being more cautious. And yeah, because I'd rather miss up on a little bit of upside because I was basically so close to being like fully invested, right? Like having minimal cash. I mean, I'm also saving some money for a down payment, so I have to keep cash on the side.
Yes.
Which is, yeah. So, but I would rather miss out on a few, a little bit of upside here than get caught with, no ability to capitalize if it really did tank. Obviously nobody can knows it's going to happen, but that's just the way I've been looking at it. And again, I put in, the same amount, but as far as like the extra goes.
Oh yeah, and for me, I'm saving up for the down payment, but that's a totally different area that doesn't get touched for anything. So that's off to the side. So I'm not even tempted to put that in the market for any reason, no matter how much.
That's good. Yeah, you got to do it like that. Yeah.
Yeah.
As tempting as it seems, where you're like, there's no way this stock could go lower. Chances are it could go lower.
Oh, I know. And the more and more people I talk to is like, right now it seems like there's more downside than upside, but the majority of people think that maybe we've hit a bottom, we're kind of going to be flat, maybe dip a little bit more, but it's more sideways trading. I think we'll see with obviously the ups and downs and volatility, but probably more sideways than anything. But who knows, the economy could go into an ugly place and we can go even lower. I really don't know. And because I don't know, and because there's so much uncertainty, it's definitely worth keeping money on the side and just playing it safe.
Yeah. And I'm sure, people watching comment, let us know what you guys think. Is the market going to make a turn for the worst, you think, or you think we're in the clear? But I was going to say, I'm sure a lot is priced in, but it's like that extra risk that does still exist, and like all the little signs, for example, we could say, what do we think is going to happen tomorrow when we get the new CPI data? And the White House already came out. They didn't even sugarcoat it. They already said it's going to be bad, basically. Yeah. So when you get that, when you get so that, there's probably a very high chance, inflation is not only staying flat, but it is still increasing. And can you imagine what that is going to do like to the markets? I mean, if we can't get inflation under control, it's a double whammy, because they're going to keep raising the rates at the same time. And obviously everything, it kills the economy in two ways, because obviously people can't afford to do the stuff. And then the stock market's going to also get destroyed until these rate hikes stop. Rate hikes are going to keep going up until inflation is 2% or significantly, under control. So it could be a prolonged issue here.
Yeah, and I think that's, if Kathy Wood and her thoughts on the fact that inventories are super high, so retailers are going to end up having to cut their prices down, which in turn will bring inflation down. If that happens, that will definitely help, because otherwise the Fed is going to have to go the Paul Volcker route and jack interest rates up stupid high just to bring things down and get it back into line. But if you do that, it causes so many other problems too. So again, they're going to try this softish landing, but I don't, obviously things are not looking good when you've got 8.3% year over year inflation, and then we're looking at another 8.3. Like, we looked like we were inflecting down, but I don't know. Oh man,
we'll see tomorrow.
Yeah, for sure. That's going to be questionable.
You're probably, I have a feeling you're going to be wearing the right color shirt, the one you got on right now.
I don't know. Just looking at it, and it's like, and of course, stupidly on my video, I'm like, well, yeah, tomorrow we're going to end up either red or green. Well, no shit, we're going to end up red or green. But it's like, I think it's going to be significant red or green one way or the other.
Oh, yeah, of course. What else? Did you want to talk BYD?
Yeah, actually, you know what? That's a good point. So going back to China and what Tesla's doing over there, with the master plan trying to get the world, to massive scale, they're going to need partners, and they're partnering with BYD. Now, looking at Elon's long-term vision, thinking that in the future, China is actually going to have a much larger and dominant economy than the US. So, I've heard this from multiple people as well, and other people are thinking the same thing. And then China is also going to most likely be dominating the world in the EV market along with Tesla. So it only makes perfect sense for Tesla to be partnering with BYD for all of this in the future. And BYD, I don't know. I mean, I don't know enough about BYD, but they're not getting into all the energy and things like that Tesla is. But if Tesla's going to get into a bunch of other things that can benefit BYD as well, I see this as an amazing partnership. And if Tesla can have a great relationship with the future world dominating economy and the largest EV producer in that economy, I think that bodes very well for the long-term future of Tesla.
Yeah, and with BYD, I think about 7% of their revenue comes from batteries. And I also thought it was interesting because there's either way, it's a positive. Yeah, like you said, they can get along with Tesla. But if BYD is selling them batteries, it means they're either producing too many to meet their own needs, which tells me
I think
maybe
that.
do they not have as much demand as they hope. So they're just looking to sell them now, or B, it's only going to help. Either way, Tesla wins because we know they're supply constrained, they're not demand constrained. So it'll help them out. So it's mutually beneficial. And then the fact, you've got their I think it was the CEO, right, said great friends with Tesla, great working relationship. And like you said, if that's going to be the place to be, you're going to want to be on good terms.
Yeah, and I mean, I see it all as a positive. I think it's a good thing, and I know a lot of people are negative on China and everything, but I think China is going to do very well in the future. I think they're going through some growing pains right now, but very much like Elon learned with PayPal and Tesla in the beginning. As long as you get through these very tough times, you're going to grow a lot from it, and I think China is going to get to that place.
You gotta take the precautions and play it extra safe basically during the tough times,
Yeah.
especially. Well, is there anything else you want to talk about?
Nah, I think we are good to go tonight.
Awesome. Well, thanks everyone for joining us, and definitely check out Tim's channel. I put a link in the description below, and we'll see you guys next time for episode 16.
Thanks, Ben.
Bye.